Hello and welcome. In this video, we will see what are the factors that affect the stock price. Alright. But before seeing that, let us see or let us learn about the different types of stocks. Okay. Now, these four are the main types. Apart from these four, there are other ways to classify also. But I think that knowing these are enough. Okay. Now, stocks based on ownership, market capitalization, dividend payment, and price trend are divided into these. In ownership, we have 3. In market cap, we have 3. In dividend, we have 2. And in price trend, we have 2. Okay. So let us look at each one before learning the factors that affect the stock price. Alright. Now, based on ownership, we have 3 classifications or 3 types. First is common shares or common stocks. Now, these are the stocks that we as retail investors or traders buy on the stock market. Okay. These are the stocks that are generally traded on the stock market. Now, if we buy common shares, then we will get dividend. We will also have voting rights. Alright. About this, I will speak in a minute. Next comes the preferred shares. Now, while some of the preferred shares are traded on the stock exchange, it is much less common than the common stocks. And these preferred stocks are not always easily available to retail investors in the same way we buy the common stocks or shares. Okay. Common shares are the common ones that we buy or invest in. Preference share or preferred shares are not available all the time. Okay. At some part of the time it is available, and whenever it is available, you can buy it on the stock exchange through your broker. Okay. Now, these preferred shares have some advantages over common ones or common shares. If you have preferred shares, then you will get a fixed dividend, but you will not have any voting rights. Okay? Fixed dividend. What is it? When the company declares a dividend, the dividend is first paid to those who own preferred shares. Okay? A fixed percentage. And after the dividend is paid to the people who own preferred shares, then the rest of the dividend is divided among those who have the common shares. Okay. So here people who own preferred shares will get a fixed dividend, and what is left after paying these people is given to these. Okay. So if we have common shares, we will be given dividend only after it is paid to those who own preferred shares. Alright. This is good, correct? Fixed dividend means fixed income. And due to this advantage, they do not get voting rights. Alright. Next, priority in liquidation. Meaning, if at all the company goes bankrupt, okay, what do? They sell off all the assets, whatever they have, and then they repay the money to the investors. And when they do that, these people have higher priority than these. So if you own preferred shares, then if a company or if the company of which you own the preferred shares goes bankrupt, then the company will sell all their assets and first pay you. Okay? Pay you before paying these. Okay? So first you are paid and then people with common shares are paid. So less priority in liquidation. So here more priority. Alright. And then we have hybrid. Okay, hybrid shares. These are preferred shares or preferred stocks which come with an option to be converted to common stocks or shares at some particular time. Okay? Do not worry about hybrid shares too much for now. Alright. Now this is about ownership. Next, about market capitalization. Okay? Based on market capitalization, we have three classifications or three types. One is large cap, one is mid cap, and one is small cap. Alright. Market capitalization is a topic in itself, which is very lengthy and cannot be explained here completely. Okay? But just know that if the company's worth is 20,000 crore rupees or more, then it is said to be a large cap company. If a company's worth is between 5,000 crores to 20,000 crores, then that company is called as a mid-cap company. If the company's worth is less than 5,000 crore rupees, then it is a small cap company. Alright? And the shares of these companies are large cap stocks, mid cap stocks, and small cap stocks. Okay? Next, based on dividend, we have two types of stocks or shares: growth stocks and income stocks. Okay? Now, as we have discussed before, dividend can be used to do many things. Correct? If the company reinvests their earning to promote growth of the company, then the shares of those companies are called as growth stocks. Okay? Whereas the companies which distribute their dividends regularly to their shareholders are income stocks or income stock companies. Okay? Now these give stable returns and are less risky. Okay. Whereas growth stocks are risky because the earning is reinvested to promote growth, and we do not know whether growth will happen or not, whether the decision made by the company will be right or wrong, and so they are risky. But if everything goes well, if everything goes according to the plan of the company, then the investors earn through capital appreciation, which is nothing but rise in the stock price. Okay. So these are stable, these are slightly risky. Okay. Next, based on price trend. Based on price trend, we have cyclical stocks and defensive stocks. Now, these stocks, cyclical stocks, are affected by the economy of the country. Okay, it depends on the need. For example, for some time, steel may be in demand. So the stocks of the companies which produce steel will be in demand. For some time, automobile sector may be in boom, may be in demand, may be growing. So during that time, the stocks of automobile companies will be growing, and so on. But if for some time infrastructure or if the demand for steel comes down, then the price of the stocks of steel manufacturing companies will also come down. So depending on the economy of a country, the price of the stocks fluctuate. Okay. Whereas these stocks fluctuate less with economic conditions, meaning they are in demand all the time. For example, pharmaceutical stocks, meaning medicine, they are in demand all the time. Correct? They do not get affected by economic conditions because the medicines are required all the time. Right? Then we have FMCG, fast moving consumer goods. Milk, tea, coffee, water bottles, all these are in demand all the time. Right? So they are less affected by the economic conditions. Okay? So these two come under the classification of price trend. All right. And apart from what we have learned, there are a few more ways to classify also, but right now it is not necessary to learn all those. Okay. So these are the different types of stocks. Now let us proceed to the factors that affect the movement of price of stocks. Okay. So these are the factors that affect the stock price. All right. Demand and supply, fundamental factors, economy, government policies, political scenario, and dividend declarations. First is supply and demand. The stock market works on the principle of supply and demand. These are the two main factors that drive the price of a stock. Okay. When the demand for a particular stock exceeds its supply, it means that number of buyers for the stock are more than the number of sellers. This creates a price hike or rise in the price, since the buyers are more willing to pay and purchase the stocks. Okay. The opposite also is true. When a supply or when the supply of a particular stock is more than the demand, then it means more sellers are there than the buyers. Now, this will take the price of a stock down, meaning people are ready to sell it or sell the shares at whatever price the buyers are willing to pay. Okay, we have seen how the big players affect the stock price movement by buying or selling, correct? So this is the first factor which affects the stock price movement. Next is fundamental factor or fundamental factors. The financials of a company is called as a fundamental factor, and it is also one of the most important factor affecting the share price. Investors will generally study the financial statements before investing in the stocks. Okay, so if a company doesn't have good financials, then investors will take out all the money or will not invest in that company. Now, this will bring the price of the shares or stocks down. Whereas, if the financial is good, then we have more buyers for that company. And so, there is a demand and the price of the shares move up. Okay. Third factor is the economy. Now, economy means the country's economy and the outside economic factors also. Okay. So, if the country's economy is good, then generally investors will have a good hope that the price or stock price will move up. And so, they will keep on investing. Whereas, if the country's economy is going down and it is not good, then investors will start removing money from the market and will look for an alternative safe option. Okay. Now, we have learned about the FIIs and DIIs also. Correct? If there is any clue that the country's economy is slowing or is showing a slowdown, then it discourages the FIIs and DIIs to invest in the country's stock market. So what they do is they start removing the money that is already invested in the market, which ultimately brings down the stock prices. Okay. Next, any major events outside the country also affects the stock price movement. For example, wars happening. There is a war currently going on between Russia and Ukraine. Now, when the Russia-Ukraine war started, the stock price or prices started coming down. When there was COVID, the market came down. Okay. So it is not only the economy of the country, but the global economy also affects the stock price movement. Okay. Next is government policies. Now, policies of government also play major role in share price movement. Okay. If the policies announced by the government are perceived as favorable by the investors, then the share price of the associated industries or sectors goes up. But if, let us say, for example, government imposes more tax on any particular sector or any product, then people will see it as a negative and will start removing money from that particular sector. This will lead to a sell-off which will bring the share price down. Okay. Next, political scenarios. A country's political situation also affects investor confidence. Events like elections, changes in government, or political instability can affect the share price. Okay? Whereas, if the political situation is stable, it can drive the price up. Alright? Next, or the last one, is dividend declaration. Dividend declarations can affect the price in a few ways. First, the price of a company tends to rise when the declaration of a dividend is first announced. This is because investors generally perceive companies declaring dividend as being financially strong and stable. Okay? However, if the declaration of dividend by company doesn't meet the expectation of investors, then it increases the likelihood of share price going down. There is also a technical impact. On the ex-dividend date, the stock price will typically drop by an amount close to the dividend being paid, because that cash is now leaving the company's accounts to go to the shareholders. Right? Do not worry much about this. So these are the major factors that affect the price of a stock. Alright. This is not the complete list of factors which affect the stock price movement. Apart from the ones that are mentioned here, there are various other factors too. Human emotion being one of them. So if the market sentiment is bearish, meaning negative, then the price of the stocks or shares will start to come down or it goes down. Whereas if the market sentiment is bullish, meaning positive, the share price rises up. Okay? So the human emotions also play a crucial role in stock price movement. Alright? So apart from these, there are various other factors too, which you will learn slowly as you continue your journey through the stock market. Alright?